Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock with news, China seems to be making a play to be avoided as an investment destination. But first, initial US jobless claims fell to just 192,000 last week when a small increase was anticipated. Still no labour market stress signals here. And the globally benchmarked S&P Market Factory PMI for the US rose in May from its steady state in April, although it did not get a boost from new orders this time. But new order growth was a feature of their May Services PMI, with an impressive display and a 2-year high. This May strength is yet to show up in the Chicago Fed's National Activity Index, which slipped slightly in April. But it is showing up in the Kansas City Fed's factory survey, which recorded a good recovery. And the PMI for Japan delivered its fastest expansion in 9 months. Their previously shrinking factory sector rose to a minor expansion, while their service sector expansion slipped slightly. India's PMI data continued its strong run in May for both the factory and services sector. A feature is the growing rise in exports, presumably benefiting from the China de-risking trend. Taiwanese industrial production was up more than 14% from a year ago in April. Their retail sales growth was more modest, however, although its base was more solid. All this comes as the full court pressure from the People's Liberation Army is currently applying to the island nation a crude show of force in the Russian style. And Beijing's claim they are prioritising business reforms rings hollow in light of all this Taiwan pressure. In Europe, their economic recovery gained momentum in May according to provisional PMI data. And the tighter global security situation has seen container freight rates leap again, up 16% in the week to its highest level in a year. The jump is all about the outbound cargoes from China, which emphasises the risks of trade from there. The Taiwan situation will make it even worse next week. But so far, bulk cargo rates haven't moved much in the past week. The US Treasury 10-year yield is now at 4.48% and up 5 basis points from this time yesterday. But the price of gold will start today down a sharp $51 to $2,336 an ounce. And oil prices are also down $1 to $76.50 a barrel in the US, while the international Brent price is down a bit less at $81 a barrel. And the Kiwi dollar starts today unchanged from yesterday at just on 61 US cents. But against the Aussie were firm, up a quarter cent to 92.3 Australian cents on a 2-month high. Against the euro were firmish at 56.4 euro cents. That all means our trade-weighted index starts today at just on 70.4 and up 10 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.